price action theory. Now, what is price action theory? Well, price action theory studies the mechanics of the candlesticks and looks at support and resistance areas in terms of identifying potential trade opportunities. I've identified here the Dow Jones, the US 30, as a key chart that we can analyze. As of late, it's been pretty volatile, and it's been operating in a pretty tight range. So that allows for some decent trade opportunities within this range. We're still arguably within that range here from about the 33,600 level. You can see a strong support area forming ever since kind of March area, where you've had rejections of this price, even on the top end where it's formed as a resistance. And now we've got a pretty solid range where we've got almost a triple bottom here on 3 occasions in the last few weeks. The top of that range I would identify at 34,472, and then for reference sake would put another resistance line at that top wick here at 34,573. Also, in terms of marking out your zonal points, it's good to draw in where that last wick occurred here, just kind of late April at the 34,261 mark. I'll bring up my cursor, you can see it pretty well. Over here, you've got a strong wick, and that is where we've currently retested that high. You can see a retest here, a rejection, a break below, a form of resistance forming support here, and then another retest. Now, this gives you an indication as to a potential trade opportunity in a zonal area. What that means is that you could potentially look at a break of this area, and just for argument's sake, we're going to put a little shape here. That could mark a price move into here. Again, if you're looking at any short-term moves in the market, you've got a potential scalping opportunity there, which could effectively assist you in a potential trade opportunity on the US 30. If we continue to break higher and travel up here, this is about a 0.6% move, or 2,000 pips actually on the Dow Jones. You could get a break again up to 34,573. Remember, this is a daily time frame. So in order to further analyze this chart, what I'd like to do is drop down to the 4-hour time frame, and you can clearly see the top end of that resistance, or the first resistance level. This is R1. This is the current resistance level that we're currently testing at the moment, 34,261, which, if we go back, was a previous high around earlier on in June. And we scroll back to current markets, you can see that's what we're testing at the moment. Now, clearly, momentum has hit that support and taken us to the upside pretty fast. And the Dow Jones, I guess, over the last 2 trading days since last week, when we had that jobs data come out, price action's been pretty strong to the upside, broken your first line of resistance around 34K, taking us up to 34,600, and then you're looking at a break of this potentially into this zone. So what price action tells you is it talks about signals that you can read from candlesticks in terms of identifying where you can potentially trade. Now, on the flip side, if you're looking at a reversal opportunity, again, you can use that. Of course, futures markets are ticking at the moment. If you're looking to hit a reversal and you're looking to find a take profit or a stop loss level, definitely good to stick with your 2-to-1 or 3-to-1 risk ratio. But in terms of a technical aspect, you could potentially put your stop loss at the top of the range there if you're selling the market, and your take profit at the bottom of the range if you're looking at this range to hold. Now, that's essentially the basics of this range bound strategy using price action. So that's one market that's a really nice one to assess based upon those beautiful support and resistance levels that we can see. Now, another market that I'd like to look at is the pound dollar. Pound dollar's been on quite a tear to the upside recently, And again, if you're trading this and looking for an opportunity of potentially continuing to buy the pound, or looking at where we could see some stocks hit to start reversing that, here is how we can analyze that chart. So the first thing we're going to do on that daily time frame, as you can see, I've drawn a support line from the bottom of that wick. About 3 trading days ago, we saw a big swing in the pound dollar. Now we're heading higher. So daily chart doesn't show us the next high or the previous high, so we're going to go skip to the weekly chart. And you can see this has been the highest level since April 22. So this is the highest level in a year on the pound. It's pretty strong at the moment, of course, boosted by the weakening US dollar. And if we're going to go to the next high, I'm going to look at firstly this support area, 129.774, which marks the bottom of those 2 candlestick patterns here. So that's a clear previous support. And we're going to take the high of that last candle on that week where the previous high is seen. Now, this gives us 2 potential target prices if we're going to continue to long the pound that we could attempt to hit. So 129.774, which is about 40 pips away from the current price. So it's not a long stretch to get hit. And then 131 as your top end target. If this momentum continues, you're looking at a potential move all the way up there. Now, if you were alternatively getting a retest or some sort of resistance around 129.774, that could possibly happen due to that area, rather this resistance area here, holding and marking potential reversal. So if we skip down to our daily chart and zoom out slightly, we can see those levels clearly here on our daily time frame. Of course, price momentum is pretty strong to the upside. So you had a clearance of that high, and you're looking at potentially, even if you're looking to scalp this, it could be a potential long opportunity here. You can have a really nice tight stop loss if you're looking to place a stop loss at the low of the day's candle, or even if you're looking for a longer term trade, the bottom of the previous day's candle, and with a take profit up to 131 if you're looking for a longer term pound dollar hold. So that's a nice trade chart to watch as well. Just if you're looking at some sort of recent price action, of course, pound dollar is coming into a bit of a confluence zone. Doesn't help with everything that I've got on the chart here, but nice clean chart will show you how to draw your. It gives you a bit more idea. So just to go back and again see exactly what we did, look at another chart. We'll look at dollar yen, which has had again some significant volatility over the last few days following the Bank of Japan intervention. We're seeing a lot of yen strength, so drop from 144 down to 140 back into this area of congestion here. You can immediately see it. So first step, pull up your chart, get a clean chart, and identify those key support and resistance areas in which you can start to plot your potential trade moves as and when these support and resistances are holding, retesting according to those candlestick patterns. So you can see currently we've got the price retesting this previous resistance here at 140.14. Of course, 140 is also a key psychological level. So if you're looking for a reversal opportunity to reverse some of these losses on the dollar against the yen, you could look at a long opportunity here, put a tight stop loss in and a take profit at 140.887, which is the top of these 2 candles here. So if you're looking to place a take profit, that's essentially where you would, I would personally place it. So that's an opportunity. Another one, if you get a break below this 140.14, you're looking at operating in this range here between 140 to 138.73. The reason why we've drawn that is because that's the baseline of that support area here. So we just again identify that this rectangular shape. We could, if we're looking at the dollar yen, if we pass below 140, we could operate here, head down all the way down to 138, test the bottom of that range, and continue to operate in that zone, which is which could be a likely scenario given no other fundamental changes or central bank interventions as the new area for the dollar yen to operate in, 140 to 138 if we break below that 140 level. So it's an interesting chart to watch as well. So these are three key charts that I'm personally watching, and the dollar yen's been a good one because we've seen this big drop in the dollar yen. Of course, a lot of fundamental activities playing behind that yen strength. What that does essentially is gives you a good potential trading opportunities to either hit the reversal as we see some sort of exhaustion at that previous support level that's been formed. However, if momentum is strong and continues to the downside, your 138.73 target is potentially on. So you're looking to short it again. Follow your risk to reward ratio, potentially put your stop loss right at the top of that daily candle and let your take profit run down to 138.73 if you are looking to short that dollar yen market. That's one that I like to look at. I mean, what I'll probably do is just go through some of your chart recommendations if you want me to have a look at anything that you're watching. We did have a request earlier for gold, but if there's any charts that you want me to analyze very quickly using that method of starting, of course, we'll just go through those steps again. But what we do is we generally start with a clean chart. After looking at that clean chart, what we do then is we analyze our support resistance areas just very simply by using the highs and lows of candlesticks, and then we look at the ranges in which we can trade that market with it. So this is a strategy that actually puts the probabilities on your side. If you're using risk to reward, strict risk management, it's actually a pretty good strategy if you can stay disciplined with it. If you've been following my other strategies that I've been talking about through the other webinars, one thing that's remained consistent is that risk to reward ratio. So that's one thing that would be definitely something that you'd want to keep consistent. Gold's been very choppy over the last, since March actually. You can see a lot of that choppiness with a lot of these candles kind of pretty erratic. You have pretty big swings in gold the start of the year, and as of late it's been pretty tight moving markets. But how do you trade this? So first thing you do is like we said is we look at the NAS 100. We look at these ranges, and again we identify where we could potentially look to head, higher or lower. If we're looking at support and resistances, let's just identify some key levels initially. So you can see a key support at the bottom of this wick here, 1892. We've also got a little gap in the market. I always like to identify those gaps because those generally, if it was filled pretty instantly, but they also form good resistance turns into support. And a nice toppy mark of that range there, 1983. Now you've got pretty interesting wicks that have formed within that have prevented gold from moving higher recently over there at around 1974. So again, a test of this 1933 level, a break above, and we could see markets continue higher up to the 1950s, which was again a previous support which turned into resistance. And we could continue just to see all this choppiness until we get more clearer direction as to rates. A lot of fundamental drivers that do impact your gold market. So that's one thing to continue. One thing to look at and to continue on. We've got a request to analyze the NASDAQ. Similar to the Dow, we've seen a bit of an uptick recently. If we look at the daily chart, we don't have that range though, as we did have on the Dow. Now this is strongly linked to the strength of the tech sector in the US, of course. You've got Nvidia, which is really pushing this to the upside. You've got some key earnings as well that are being released. But if we go on to the weekly chart, again, clean chart, we can see that we're coming up to a bit of a resistance area here. We just take the top of those wicks. Now, those wicks represent the price action from that weekly move, where we're looking all the way to the highs now of 2022. So it's operating at a pretty high mark, respectively, on the NASDAQ, and we've seen a previous rejection here. So if we go back in time, we see 1 rejection, 2 rejection, 3, 4. So we've got a multiple top formed at 15,267. If we're going to draw the base of this range, what I'll do is I would form it at the first base here at the bottom of that weekly wick, 14,665, and the current weekly bottom there for about 14,9, just slightly below that, 14,915. Now we can drop down our time frames and we can have a bit more of an in-depth look at this this movement. It's pretty interesting. If we just draw a fib here. I've drawn it the wrong way around, apologies. There you go. So you can see here from this fib and the top end of that range is that the market's been on a bit of a tear this year. Throughout the whole year, we've seen some pretty interesting moves. We go on the daily chart and look at a fib here. Again, we can see support and resistance is holding pretty well, but you're looking at potentially operating within this range for quite some time. If we do get a break below 14,665, now the reason why I say quite some time is that's a very strong resistance area. We do have earnings which could fundamentally move the market higher to further new heights, which momentum on the tech stock side is very possible. If you do get a break of 15,267, you're looking at hitting the top of those 2 candles there at 15,721. So it's quite a way, about 500 points to travel to the upside if you get a break of that. However, if we just skip back to the daily time frame, you're looking at potentially staying within that range for a while. It's about 100 odd point range there. Got another request here for the Aussie dollar. We'll just quickly look at the Aussie dollar. And unlike the pound, which has been on a tear against the US dollar, the Aussie's been pretty stable now. Very shortly, you'll have the RBNZ meeting as well, the interest rate decision. That could have a bit of a sideshow impact on the Aussie. But again, the Aussie's been nice and range bound as well. Why I say that is because you can identify some really nice trading opportunities here within that range. Now, that's an hour time frame. If we go to a 4-hourly time frame, we can see that it's been operating within that range here between 66.95 and 66.50, so about a 40 pip range for quite some time. Now, if you're looking at scalping opportunities, you're potentially looking at shorting, longing. If you're looking at a breakout, your breakout to the upside is again presents a nice trading opportunity, because if momentum stays on the Aussie side, you've got a target there at 67.20 with a tight stop loss. That could be a really nice trade opportunity there, just to take out that top end wick, get a retest there. Again, continuing momentum to the upside, you got another nice resistance area right here on the Aussie at 67.420. So some targets there to the upside. You have a nice stop loss, and it's pretty strongly supported around the bottom of this range, but definitely very range bound within those areas. So if you're looking for trading opportunities, potentially have to go down further on the time frames. You can see might be one that you want to stay out of for now, just simply because of that very tight range that it's operating. Well, very good. Thank you, everyone. It's coming up to the end of the half an hour time slot. But thank you, everyone, for your attendance. If there are any questions, we'll keep the screens on for a few minutes, and we can just address them individually. If anyone would like to revisit what we've discussed, we'll be sharing this podcast on our YouTube channel as well. And please do go and watch it again if you've missed out anything. But yeah, now's the time to answer any question, ask any questions if you have them, just about that technique or about how we analyze charts. Of course, we've covered quite a lot today in terms of using price action, identifying key zonal areas for support resistances, range-bound trading, candlestick patterns, so YouTube channel name, Black Bull Markets. Yeah, just type in Black Bull Markets on YouTube, you'll find a lot of our videos and a lot of our content there. Cool. Thank you, Hashim. Thank you, everyone, for your attendance. Be ending it there then. Wish you guys all the best of luck with your trading this week. It's pretty volatile in the FX market, so do trade safe. If you're looking at the Dow Jones, again, that's my market of choice, one that's on my market watch window this week specifically. Again, keep watching your news, watching your earnings releases, and wish you all the best. Thank you very much for your time, and trade safe.